It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Monday evening, May 23rd, 2016. Got another exciting newsletter for you tonight. By the way, I hope you enjoyed the weekend. We're almost out of spring. Holiday short. We've got a big holiday weekend coming up here in the U.S. I can smell the barbecue grill firing up as we speak. But we got some work to do this week. Got a busy newsletter for you tonight. Got a big plan for this week. We're covering crude, S&P, gold, and euro. Markets are definitely looking a little bit choppy, a little bit low volume ahead of this holiday weekend. Crude and gold have some pretty decent trends going on. We can look forward to that tomorrow, while the S&P and the euro are trading inside some real narrow ranges as we go into Tuesday's trading session. Before we get into charts, before we take a look at tomorrow's schedule, I do want to remind you guys, the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, that's wonderful. We have some phenomenal trading videos on our YouTube channel, but the only place to find the full-length version of this video is going to be here on our blog at Sideways Markets. If you're on the YouTube video, there's a link in the description of the YouTube video. Follow that link. Come over here and watch the full-length version over at sidewaysmarkets.com. While you're here, don't forget, if you're not an advanced member here at School of Trade, I got a free pass for you guys. Come out and join me in the trade room as a guest for a couple days this week or next week, whatever's convenient for you. Grab your free pass in the upper left-hand corner if you're not already a member. In the lower left-hand corner, don't forget, I'm going to email you every evening when this newsletter is ready. All I need you to do is register as a member of our newsletter mailing list in the lower left-hand corner. How about the charts in tonight's videos? You can download and use all the charts you see me using in tonight's video by following that link right below the video on our blog. And then over on the right-hand side, I get this question all the time. What does it feel like to be a student? What does it mean to be a member here at School of Trade? What's included? How do we trade? What are some of the strategies that we use? Learn more about the free trial on the right-hand side and experience more about what it means to be a student here. And don't forget, I've usually got someone standing by, almost always got someone standing by 24/7, 365 to answer all your questions. We've got some live support there on the right-hand side of the blog. Use it if you need it. We're always standing by here to give you guys all the information, the answers to your questions. Let's jump into the calendar for tomorrow. Tomorrow is Tuesday, May the 24th. This is the fourth and final full week of the month. We got one more day next week. We got Memorial Day weekend coming right around the corner here. Looking at tomorrow, though, first of all, starting with tonight, we have no major news on the schedule for tonight. So nothing out of Asia, nothing out of Australia here. So nothing to worry about here coming out overnight. And then we go right into tomorrow's session, Tuesday, May the 24th. We've got some real minor news. We got some Swissy here. We got some GDP from Germany. We got business climate in France. All this stuff is kind of it's not really that big of a deal. The ZEW at 5 a.m. tomorrow morning will probably be the biggest potential market mover, right? That ZEW tomorrow morning, that's a business climate survey. It's kind of like jobless claims, but for small businesses or businesses in the country of Germany. So we definitely know that will be potentially a market mover. But, a lot of these are real minor news reports. It's not going to be until we get into the trade room tomorrow morning at 10 a.m. We open up our trade room at 8 o'clock Eastern time every morning. It won't be until 10 a.m. tomorrow that we really have a market-moving news event. So nothing on the schedule for tonight. Nothing really to worry too much about tomorrow morning. It might be a little bit slow out there until we get into the U.S. session tomorrow morning at 8 a.m. Eastern time. And then you'll notice there's really nothing tomorrow night either. So it's going to be a week here. It's pretty much dominated by U.S. session news. We got some Thursday news in Europe, but it's pretty much going to be dominated by U.S. session news. Now, little bit of a heads up here. We do have the Memorial Day weekend coming around the corner. It's next Monday. That means Friday will be a half day. We will be trading on Friday, but with Miss Yellen speaking in the afternoon, and of course with the summertime party going on in the U.S. this weekend, we definitely expect this week to be an early in, early out, and very much a half day on Friday. So plan your week accordingly. We'll get a day tomorrow, though. We're going to focus on tomorrow. No major news until 10 a.m. tomorrow morning. So we get the plan that's scheduled for tomorrow. Take a look at the crude. We'll go crude, S&P, gold, and then the euro. We get a couple strong trends, and we get a couple real ugly ranges on this kind of holiday-shortened week here. So we'll see if we can make the best of this here tonight. Crude is bullish and trading and trying to complete rotation up to the high of a channel, but a triangle pattern tells us they may look for a pullback before this price finishes the job. The sellers took control at the beginning of the session today, but as of 10 a.m. Eastern Time, the bulls had reversed the trend with strength, extreme strength, and the buyers are currently trying to retest the highs once again this evening. The major bull channel tells us the buyers will try to finish rotation back to the highs where the measured move is waiting as a target, and the minor bull channel will be used as additional short-term support and resistance on the way higher. The big variable will be the triangle because price is just above the highs of that triangle right now. You can see I have it shaded there in the white, and it appears to be stalling out. Look at the candlestick wicks in that those last few candles there, and you can see the candlesticks wicks, right? A lot of big wicks up at the highs of those last few candles above the high of that triangle. This tells us the bulls may want to buy this after a pullback to the highs of the triangle, or possibly a trap below the lows before they send this price higher tomorrow. Buyers want to see this move continue with strength, or they will need to wait for a strong signal after a pullback to support. The short-term sellers will be waiting to see if the next pullback fails. Sellers will be looking to see if the next pullback fails, and they'll be targeting back at the lows of the triangle and possibly a collapse all the way back down to 47.40. Let's break this thing open here. Look at the clues we have in the chart here this evening. First of all, we have two bull channels on the chart here. The major bull channel, whenever you think about channels, you want to think about rotation. So, of course, we can see very, very good rotation there from the high to the low back to the high down to the low, and then where are we trying to go next? Yeah, back up to that high, right? So that's where the target is waiting for us right now. We also have a major measured move, as you can see, which is just so conveniently placed up at the high of that channel. Now, you could also go into a little bit smaller picture here and think of this as another measured move, and that puts us just shy of the major measured move. So everything lining up here relatively consistent. The buyers are trying to get this price back up to the high of that channel and ultimately revisit that high of day today at 48.50. Right now, the buyers have resistance targets overhead. First at 48.27 to revisit the high they made earlier. Next is going to be up at that measured move area at the high of the channel at 48.46. And then, of course, a little bit higher there up at the high of day there at 48.50. That'll be the ultimate objective right now for the bulls. With that said, we also have another short-term bull channel. Now, this little guy here is definitely going to be important because, as you can see here, we're seeing rotation from the low to the high to the low, right? Back up to that high. That's where they're gunning for next. If they can get to the high of that channel, we'll look for the pull back to that low and then back to that high. Use that channel rotation. Use that channel rotation to your advantage. But wait a second, though. I'm starting to smell the engine stalling, right? Look at the candlestick wicks right here. See those big wicks at the top there? Yeah, that definitely is not strength, I'll tell you that much. And when we look left, we see this triangle that's formed here, right? Line up those highs, line up those lows. That creates a triangle. And so this just kind of looks like these buyers might be a little bit tuckered out here right now, and they may be looking for this price to pull back before, right, they get that move back up to those highs. Most important thing to remember about a triangle is that there are going to be trading opportunities around the edges. Okay, so we talk about the triangle, breakout, pull back failure, back inside the triangle, and really what the buyers would love to see is a move back down to the low and the ability to buy the low, or possibly back down to trap below 47.59 and then go up from there. That obviously would be the more desirable spot for the buyers because then they can buy at a much cheaper price, and that of course is just good business sense, buying at the lowest possible price. So we know the bulls have control. We also know that we have a bull channel looking good for rotation higher, and we know the big variable here is that triangle. Let's play that game. What if price goes higher? What if price goes lower? If price goes higher here, buyers are going to have to be weary of buying into that overhead resistance. So if price goes higher, look for a breakout pullback holding above 48.27 to finish that move up to that high. If price goes higher as well and cannot stay above that 48.27, then look for it to return back to that channel low, then up from there. Just make sure you're not buying into that 48.27 resistance or buying into any of the resistance areas that we have listed above. What if price goes lower here right now? If price goes lower, that will ultimately be the more desirable for the buyers right now. They really don't want to buy high. If price goes lower here, we look for that support to hold for a breakout pullback on the way higher. Keep in mind though, if you're a seller, this is where sellers are going to be looking for those buyers to fail so they can sell back inside that triangle. Once you get down to the low of that triangle, though, this is where now the buyers will likely try to pick this back up again, looking for a failure at the low to buy the low of that triangle. Just a heads up, though, watch out for this falling resistance trend line. If you're going to be buying the low of that triangle, it may be a little bit easier for you here to wait for it to get above that triangle and then again break out, pull back from there. As the triangle gets narrower and narrower, we tend to see this price get stuck right inside that triangle. So just don't buy into resistance. Obviously, the most attractive area here is going to be, again, breakout, pull back here. If they can't get it there, it will fall into that triangle. Buyers will try to buy it here. They'll also try to buy it on the breakout, pull back above, or sellers can look for a breakout pullback to sell it lower. Just make sure, though, if you're a seller right now, make sure you don't sell into that 47.59 support because that's definitely where additional buyers are going to be coming in. So right now, the buyers have their chance, right? Buying on the breakout pullback, buying the low of that triangle, and buying with support as we go lower. Sellers, you guys are looking for the breakout pullback to fail, looking for a breakout pullback to hold, and of course you're targeting these areas of support that are waiting for you below. I think we got a pretty good handle on this. We definitely will err on the side of the buy side right now, so sellers, wear the helmet and be careful out there. Make sure you have enough room because buyers will be looking to buy all the support levels that we have listed below, really until we can get and stay below that 47.59, because then of course the buyers will know they've been beat. Looking forward here now to that session tomorrow. Don't forget, we open up our trade room tomorrow morning at 8 o'clock Eastern time, and we'll be trading that market live in real time. How about some S&P? Honestly, I looked at this chart this afternoon, and I said, I must have missed rollover, right? I mean, I must have something wrong. Am I not connected to my data? What the heck is going on with this market right now? Very difficult. As you can see, the S&P is balanced and trading inside of one of the narrowest ranges we've seen all year. I can't even think about the last time I saw a range this narrow on the S&P. We've had the euro suffering from some sideways-itis over the past few months, right? We got the whole Brexit debate going on. That's going to be next month, you know. So I can understand the euro, but S&P? I hope you get your act together tomorrow, because this is just one of the reasons why I love trading crude oil. Crude always seems to outrange the S&P 500, but boy, oh boy, look at this range here. One of the nastiest ranges we've seen all year. Again, maybe even halfway through last year. I can't even recall the last time we saw this. I hope the excuse is we did a little bit too much fun over the weekend. It was a beautiful weather here in Los Angeles. I hope it was beautiful weather where you were. And so maybe the S&P, maybe there was just a little bit too much shenanigans over the weekend and they just slept in today. Who knows? We'll worry about that tomorrow, but this is a very, very narrow range. And of course, this basically tells us real simple. Look for failures at the highs and lows of the range until this market finds a direction this week. When we find a market trading sideways like this, we focus on range rotation, failures, and the pendulum swing for our targets going in the opposite direction. As price goes lower, we look for seller failure at support levels below. And as price goes higher, right, we're looking for buyer failures above the highs. Now, we have another range like this on the euro, unfortunately. The euro is still trading inside the same range from last week. Let's talk briefly here about trading ranges.